Is the dollar about to crash? Are stocks about to roll over? And are gold miners going to run into a wall? All that and more on Sunday Night Charts. We take a look at charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me today. The moving average colors on your screen. The 21 days in red, 50 days in green, 100 days in blue, 200 days in tan. Price is the general direction. Prices are at momentum is the rate of change, a bullish indicator for both this positive and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is the level buyers can't break, and support is the level sellers can't break, or resistance is where the sellers are at, and support is where the buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of trade, help with time of trade, and provide the direction of the path least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's kick it off with the S&P 500. Looking at SPY and the percentage of S&P 500 stocks above their 50-day moving average. Now, if you are a short-term trader, you want to look at this because this is really important. When you see a -1 or -2 standard deviation, the odds and probabilities of a move higher are strong. And here we can see, looking back to December 15th, shortly a few days after that, when the stimulus checks from the latest child tax credit had hit bank accounts, we see stocks go up. We see what is called breadth also rises, and now we're sitting right around 71% of the S&P 500 stocks above their 50-day moving average. And you kind of knew that was going to happen, because when times it gets below this -1 or -2 standard deviation, that means the odds are good. Now, if you're a longer term investor, when you look at the percentage of stocks above their 200-day moving average, you get a similar story of 73%, but the trend now, you notice, is not as choppy. We're seeing a much broader slowdown in the S&P 500. So when you're below the 200-day moving average, it is considered bearish. So right now, 73% of it is above, the rest are below, and the trend is actually slowing down, meaning there's fewer and fewer stocks leading the market higher, and that is early signs of a bearish signal. Now let's take a look at SPY. Looking at the moving averages, we see the price on all of them is headed higher, but notice momentum only on the 21-day has turned up, whereas on the 50 and 100-day moving averages, the momentum is slowing, and that's bearish. It's above all the key moving averages. 1 month momentum now looking higher. No surprise there. Let's take a look at the chart and see what's coming for the S&P 500. And what do you notice is that post child tax credit stimulus drove the market straight up and ran into a small bit of selling here above this consolidation zone, or this support. This is resistance zone, this supply zone. There's what I was looking for, supply zone, where sellers were at, broke through there, but maybe to the high side. We'll see if this comes back down. In fact, I would say the probabilities that this comes right back onto the high side of the supply zone would be good. If you're bullish on broad equities on the S&P 500, you want it to come down, confirm this upper part of the supply zone, and then take off. If you are bearish on this, you want to see the sellers come in and drive this back down. Let's take a look at, of course, what Momentum Timer Pro sees in this, because this is a really good shortcut to getting answers you need in a quick way. And if you're not subscribed to this right now, it's still free. I'll put the link up above so you can jump on that. And you'll see it's suggesting over a 1 month window, a 3 month window, and a 6 month window, mid-sized positions, mid-sized relative to whatever is your min and max position. And look at I want you to understand this from a perspective of looking at the 6 month chart. It's not overly maximum bullish, because there's been some dips in here, and that's all Momentum Timer Pro is telling you. Look at the 90-day chart, it's the same story. It's rising, but there's been some pretty decent dips along the way, and it's saying, hey, the momentum is in your favor. This is what it's telling you. But don't be overly aggressive. Just take a mid-sized position and look at it on the 1 month, and you can see it's telling you the same story. The trend is rising, but it's choppy. In fact, if we see price come down, I'd expect MTP to move that to a min-sized position. So you can see it's a great tool that you get every day by email to help you figure that out. Let's take a look at the Nasdaq. Now, the percentage of stocks above their 50-day moving average, lower than the S&P, which is, remember, on the 50-day was around 71%. Nasdaq is at 61, so that's telling you 39% of the Nasdaq 100 is below their 50-day moving average. It popped just like the S&P did, but it didn't get all that full move. And so what it's telling you is fewer and fewer stocks overall are participating in this trend, with only 61% of this over their 50-day moving average. But keep in mind, anytime you see this -1, -2, -3 standard deviation in a shorter term window on the 50 days, so we're looking at a 1-year chart, you want to be thinking that, hey, and look where the bottoms or short-term bottoms are occurring. Now, there are some longer-term bottoms that occur here too, but look at where the shorter-term bottoms, if you're not using a tool like this, well, you should be, is really useful. Now, a different story here is we see the 200-day moving average, the percentage above that is at 65%, and you want broader participation here because, again, below the 200-day moving average is bearish. It means they're in a down market. They're in a bear market, and we're not seeing a lot of strength here, with only 65% of the Nasdaq 100 above its 200-day moving average. Let's take a look at QQQ. Again, all the moving averages are rising, but that doesn't tell the whole story because the rate of that increase is slowing down. It means momentum behind the moving averages is getting slower. Dip below the 9-day moving average. One month momentum has gone positive. Let's take a look at QQQ. What do we see? Plenty of volume profile on the 6-month, plenty of support below. It's sitting in the supply zone. Unlike the S&P that jumped pretty decently above it, the Nasdaq only briefly got above it and ran into sellers. We could probably move that line up a little bit if we really wanted to be more accurate here. And something you have to adjust your lines and be fluid to that, because that's kind of how technical analysis works. You draw your lines and then you let the market kind of help you figure out where they really should be. And this is now more accurate. Notice how I'm drawing them right around that big chunk of volume. That's the way you should do it. So, don't get set on your lines and say I'm committed to them. You have to let them move a little bit and breathe, and this is what we're doing. So clearly the Nasdaq 100 still in supply zone, still up here is a sell zone, down here is a buy zone. So it's up to the sellers to demand and drive that. Let's take a look at what MTP says, and on a 1-month chart it says no position, and on a 3 and 6 month it has a mid-sized position. And does that make sense? And the answer is yes, because look at a 30-day window. The moment it's gone flat. I mean, there's no momentum there. It's just telling you what you already need to know without having to dig through the charts. That's what I designed it for. Looking over a 3-month window, momentum is rising, but it's not super strong. So saying, hey, don't take an outsized position on this because it's too risky. All right, let's go on to the IWM, the small caps, because there's a big difference in stories here. And I want you to understand, small caps lead the large caps. So if you are trading the big caps, the big stocks, and you're not looking at the small caps, you really should be. Look at this percentage of Russell 2000 stocks above their 50-day moving average is 43%, and that is weak. And wait till we look at the ones above the 200-day moving average. That's even weaker. So what you're seeing is this downward move in small caps, because fewer and fewer of them are participating. So remember, the 50-day moving average is critical because rallies start with a cross up over the moving average and a confirmation, and bearish moves start with a cross below it and a confirmation on the bottom side of it. So we see some bearish indicators here. Looking at the percentage of the Russell 2000 stocks above their 200-day moving average is 48%. So that means more than half of the Russell 2000 is in a bear market, and people are bullish on the broad equity market. They shouldn't be at all. And look at what momentum time, or not MTP, look at what our screens are telling us. 21-day moving average and 100-day moving averages are bullish, but the momentum is slowing. I mean, you keep seeing the story. The momentum is slowing. So these moves higher are not being validated by an acceleration in momentum. Remains above the 9 and 21-day moving average. The 3-month momentum has turned positive, which is good. 9-month momentum is negative and rising. Those are good signs. Let's take a look at IWM, because the story in IWM is the chart. And here you can see it came down into the supply zone. The buy zone got bought. This is why you look at technical analysis. Tells you where the buyers and sellers are at. And here is a 6-month volume profile, and that is kind of the line in the sand. When it crosses above it, the sellers start showing up. When it's below it, the buyers are. And sure enough, it got just above the 6-month volume profile, and look what happened. The sellers came in and pushed it right close, right on top of it. In fact, if you zoom out over the last year, you can see the sideways pattern is sitting right there. Sellers are above it, buyers are below it, and right now momentum is to the downside because, of course, this is a big risk. If small caps are not leading the big caps or not confirming it, you've got a problem. Now look at Momentum Time Bro saying no position on a 1 month, no position on a 6 month, and a minimum position on 3 months. Is saying, hey, look, if you want to take a chance, you take it at, look at the 3 month window, but don't take too big of a position. And it makes perfect sense. Again, the report was just designed to be a shortcut to actually having to dig through all the charts every day. How about we move on to the transportation sector, IYT. Remember, transportation stocks tend to lead the market. That's generally a good thing when they're moving higher. A price on the moving averages is bullish, headed higher. Momentum unchanged. Remains above all the key moving average. All the momentum screens, different lengths are all positive. So those are some good signs. So is IYT telling us that small caps may go the other direction? That maybe the large caps are headed the right way? And let's look, we have one top, two top, and maybe at the rate we're going, we're going to have another top here saying, look, it's very clear where the sellers are at. It's very clear on the 1 year chart where the buyers are at. You see it at 249. Let's zoom in to the 6 month. You can see plenty of support at 251 on the 6 month. Let's zoom in to the 10-day. Plenty of support on the 10-day below. So right now, IYT is bullish to at least make an attempt at tagging its all-time highs. Maybe that would be a boost to the broad equity indices. But again, keep your eye on IWM. Let's take a look at the energy sector, because energy tends to also be a leading indicator as prices go down in crude oil. Tells you that financial conditions are tightening. And so what do we see? Price on, at least on XLE, the 21-day and 100-day remain positive. Again, you still seeing the story, but momentum is slowing down. It's below the 21 and 50-day moving averages. Let's look at crude first and see what we can determine there. Where there's crude, nice amount of support at 72. Remember, we talked about 72 was resistance. It came down. You know, this is what's called a bull flag. You get a flagpole, a little flag here. We're not going to draw it in and then shoot higher. So that is a very tactical bull flag move. Broke through the volume profile. Clearly telling us the buyers are taking this up. Where can this go? Can this get up into the $79, $80 range? Yeah, absolutely. There's no reason it can't get up and make a touch at that supply zone up there. Let's zoom out to the 1 year chart, and we see all the buyers are sitting at 65 to 71. That or 72, that is real important. So I would suspect that there's some momentum still going here. We'll see, you know, maybe was that just a year-end move? That is kind of the question. Was that a year-end move we just saw, or is it the beginning of a trend? Looking at the actual energy companies, remember the stocks are kind of giving us a different picture here. They're running into resistance, into this, you know, kind of choppy supply. They've gone up, come down, bounce, bounce. You notice they crossed the 50-day moving average and confirmed the bottom side of it. This would be the early indication of a bearish move down. Plenty of support at 48.67 on XLE. Let's go on to financials, who probably cannot wait for the buyback blackout window to end so these banks can buy more of their stock back. Price on 21-day moving average now heading up, 50-day moving average headed down. Virtually nothing else really that matters has changed on here. Let's take a look at XLF and see what we've got. And there it is, sitting right above its 6 month volume profile. Came down, and like everything else that got bought, hit the 200-day moving average. And remember, if it's above the 200-day moving average, it's bullish. Below it, that's bearish. Hit that. Buyers came in, drove it back up. And where did it hit? The bottom side of the 50-day. The 50-day is more important on the trend than anything else. Notice how it crossed and usually you want to see it cross a downward sloping 50-day moving average across it. But look, it confirmed the bottom side of it, confirmed the bottom side of it, confirmed the bottom side of it. Where is that telling you XLF is probably going? Back down to touch this volume support line. Maybe it'll just tag its 100-day moving average. At least you should see in the early side of this a downward move in financials. And that, of course, as we know, would be bullish for bonds, and we'll get to that soon enough. How about the industrials? XLI price is bullish across the board. Momentum is now turning up on the 21-day moving average, above all the key moving average, above all the different momentum screens. Let's take a look at XLI and see what we've got here. And sure enough, 6 month volume profile is holding well. It came down and just shot higher below it. It would drop, notice how it's holding this 200-day moving average. Went below it, but fought it and held it. Went below it and fought it and held it. I mean, these aren't really good confirmations of holding moving average because it just gapped way down. But notice buyers are coming in every dip still. The question is, with fiscal stimulus gone, can they hold on to it? And there you can see where the volume profile is on the last year. Sellers above, buyers certainly below. So right now, the ball is in the court of the seller's hand. Not much in direction here. Perhaps maybe an attempt at those all-time highs again. We'll see early into next week. XLU, now the very first signal we have on the 100-day moving average, saying momentum on the 100-day is slowing. Back above the 9-day moving average, was just one of the near meaningless signals, but it's certainly worth looking at. Here we see, is that a new all-time high for utilities? Indeed it is. So there it is. We got one top, two top, and everyone's looking for safety in the utility sector. It's usually one of the last dances that happens, and you can see a lot of people cramming into utilities at their highs, and that is an ominous sign. But sure enough, it's crossed this 50-day, reconfirmed it, and went up. So keep an eye on that for a potential reversal. If you're a short-term trader, look for that. Maybe some opportunities for you there. Let's go on to gold miners who look like they're about to run into a wall. What do we see? Prices bearish, but momentum on the 50-day and 100-day picked up as we saw some binds. Now back above his 100-day moving average. This would be the early. You want to see, if you're going from a bearish move, you want to see it move above the moving average, 9, 21, 50, and then 100. And we see 12-month momentum is now negative and rising. So it's fighting, but is it about to run into a wall? Let's take a look at GDX, and here you can see, there you see at 32, 33. There's your 6-month volume profile. We know the sellers have been dominant above that. Buyers are coming in at lower and lower levels, and that is not necessarily a good sign, because if it gets rejected here, leaves the buyers with not a whole lot of options left. And what do you see? Certainly the 2-year volume profile is up there, whereas the 1-year, it's up at the same spot. And look at this chart pattern. I mean, buyers keep coming in at lower and lower levels, and they keep getting less and less and less. At some point, they give up. GDX goes, and so goes the rest of the market. So about to run into walls, so look forward to attempt to hit that. How about emerging markets? Bearish price and momentum across the board. 6 and 9 month momentum turning up. But remember, EEM is generally a similar trade to GDX, and it is a good indicator. If one is not confirming the other, then you've got a problem. Certainly you see the 6-month volume profile. Notice how EM across the 50-day moving average, it's popped through it, but it can't hold it. Popped through it, can't hold it. And it's just following this thing lower, and it's been following it lower, and it started that trend, kind of back, earlier this year, and a lot of people didn't heed that warning and see it, but sure enough, you can see it moving lower and lower and lower. Major support at 44 where the last of the buyers break that. And, there's a lot of damage coming to the markets. This is another early signal that's telling you that perhaps the market is not going to continue going higher. When emerging markets aren't moving up, when gold miners aren't moving up, it's not a good sign. How about high yield bonds? People are buying junk, and they're going to regret it at some point. Dip below the 9 and 100-day moving averages. 9-month momentum now positive and rising. Nothing else really changed on HYG. Let's take a look and see. 6-month volume profile up there. Companies keep issuing more and more of this debt. Investors keep buying it. I find that very interesting. And look at that, slammed right into its 1-year volume profile. Sellers were eagerly saying, hey, you want to buy at this price? I'll sell you whatever you got. And sure enough, that got rejected. Overall, this is still a bearish picture. It's below the 200-day moving average. And when high yield bonds go, so too does the market. In fact, if high yields are not confirming a rising broad equity market, you've got problems. And something that, you talk about problems, look at what your insurance is. You look at long-term treasury bonds, TLT. Now, this is interesting because it's below, the 9, 21, and 15-day moving averages, but we're starting to see some improvements in price on the 50 and 100-day are turning up. Momentum is bullish. So there's some signals that are saying that perhaps it may be below its moving averages, but the moving average signals are telling you that, hey, price is moving up, momentum is moving up, that perhaps that's a story of opportunity. And what's interesting about TLT is you see this big move higher. So maybe here's your flagpole. Here's your perhaps a flag. Could be a bull flag situation for me here. And notice how on Friday it rammed right into the 6-month volume profile. What happened? It found sellers, and that's where they're at. So sellers are above here, buyers are below here, buyers. And the only question is who's going to win that battle out. Of course, the economy is going to help the buyers out a lot. But if this continues to see the buyers come in, it starts to rip out these sellers. And that's why you see these bull flags. So you see price go up because all these people right in here that you see how it's been selling down. What are they doing? They're shorting or selling. And then all of a sudden, your price breaks through. And what happens? The shorts get squeezed and they turn into buyers and boom, 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 prices go. So if this is a bull flag, well, that makes it certainly more interesting. You see it here. You see that it rose up and kind of flaggish, not the previous flag, but then what happened? Price went up, squeezed the shorts, boom, boom, boom. They come back in. So I'll still remain bullish on that. For the time being, it's not as bullish as I'd like, and Momentum Time Bro says that perhaps I shouldn't be as bullish as I am. The 1 month window says none, 3 month window says none, and on the 6 month window it says minimum. But does that make sense? Yeah, it does. I mean, look at a 6 month chart. Is this something that you would take an outsized position in? No. How about the 90 day? No. How about the 1 month? No. You wouldn't take, I mean, these are not something that's telling you that momentum is strong. Now, if you have a macro view of and an understanding of all that stuff, that's different. But from just a pure momentum profile, MTP saves you all the trouble of looking at the charts, tells you what charts you should be looking at. Go find the ones where it's got some conviction. How about gold? Price bullish, momentum bullish, and the gold bulls are celebrating because this is going all green now above all the key moving averages. They're finally saying maybe this is it. Maybe that GDX wall gets busted. We'll see. And look at that 6 month volume profile. The bulls came down to 1750 and bought and drove it up, jammed it right through the 6 month volume profile, and are now back above 1820. And guess what happens every time they get above 1820? Yeah, the sellers show up. But look at this, a 1 year. You see, so there's some positives here. Let's see where the 2 year line is at. So you see how tight where the buyers and sellers are, right around this 1800 mark. The question is, can the bulls finally flush out the last of the sellers? Well, guess what? They're going to find out probably Monday morning, because guess where the sellers are at? They've been right there at 1830, so keep an eye out on that level. Let's see if silver is helping out gold at all. Unchanged on the moving average situation. Price on the 21-day is turned up and gotten bullish. Momentum on the 100-day moving average is picking up, and 12-month momentum is negative and rising. Does that give the silver bulls any sign of relief? Well, let's zoom out and get a bigger picture here, because silver is really interesting because you had this pattern up here, it broke down, and now everybody's hoping for a double bottom and shoot higher in prices. So this is a new supply zone. Now we can properly identify this, and what this is this is where the buyers are at, and right above it, here in the $24 range, is where the sellers are at. So what should we expect from this? Well, you've got the 50-day moving average just above, and then above that, you've got the supply zone. So what I think is going to happen with silver is it's going to attempt to break into that supply zone. And if that supply zone is still full of sellers, it will get rejected. That's simple as that. So I'd say very short-term bullish. If you want to be bullish on this, you tell me if there's still sellers here. And if there are, that double bottom gets reversed into perhaps an inverse head and shoulders. And that is not too good for silver. So silver not giving us any confirmation. How about the dollar? Is dollar finally going to crash? I know it's been the prediction of many, many people. Let's find out, because the charts aren't so friendly at the moment for dollar. Momentum remains bullish, still below the 921-day moving average. 1 month momentum negative and falling. Let's take a look at the dollar and see what's going on. And we got to zoom out to the 2 year chart, because this is a story. It got up to the supply zone, and guess what? That's where sellers are at. So buyers down here, sellers up here, and sure enough, how do you know your lines are in the right spot? Because when they get there, what you expect to happen does. And sellers showed up, buyers said, nah, we're not done yet. Sellers showed up, and sellers said, let's keep going on this, to the extent where, check this out, where's UUP? Here it is. And so it's got heavy volume support at the 2 year. So the last 2 years have been a lot of buyers down here, so that's good for support. 1 year's got plenty of support, but look at the 6 month. It jumped up, and you can see lots of selling over the on the 6 month chart, perhaps particularly concentrated in the last several days. Look at the 90-day, sellers dominating there. How about the 30-day? Sellers dominating there. 10-day, sellers dominating there. So what happens from a chart perspective? Well, you've got the 50-day right below that has been a sign of support. And if you look at the 1 year chart, what do you see? It crossed the 50-day, confirmed it. Not really, but sort of confirmed it, but held it, confirmed it. Will it confirm it again? And if it does, well, the dollar bulls will have their day. And with that, we'll see you back on Monday for the show. Thanks for watching. Bye now. The content of this video is provides educational information. It's not intended to provide investment or other advice. It is not to be construed as recognition or solicitation to buy or sell a security, financial instrument, or to participate in any particular trading strategy. This video was prepared by Steven Van Metre. Or personal capacity opinions expressed in this video that do not reflect the view of financial advising or Steven Van Metre Financial.